This is an example of backtesting ICT, MNQ, MNQ. So the day we're backtesting is, I think it's Monday, January 9, 2023. This is a good example. But before, let me show you our game plan. So the trade idea is, you start with the daily buyers and levels, and then liquidity grab, find the liquidity grab at the levels, and find displacement. So for a market structure break, then break of high or low, then find the fair value gap, and then set the limit order and stop loss and take profit. um, so this trade idea is, the idea comes from, I watched this guy's money engineer on YouTube. So he used US 100 for and 1 minute for trade. So there are also a couple other ICT traders, and so I always like to start with the daily buyers. I have a couple indicators. This is my background for days, for trading days, and I use the ICT imbalance, displacement, and fractal break imbalance, fair value gap, liquidity void. Those are important ICT concepts. So you can see, this is fractal break imbalance. It says here is a order block in here, order block here. Is fair value gap, bullish fair value gap, and bearish fair value gap. And those yellow ones are energetic candles. There's also volume energy. I think it's a volume energy, right? Volume imbalance. Yeah, bullish volume imbalance, and bearish. Yeah, yellow ones are energetic candles. So from a daily chart to start with, this is a year of days daily. So we've been going down for about a year, and here he has triple or four times down. In the weekly, it is actually, um, higher high, higher low, lower high, lower low, lower high, lower low, lower high. So we could go a lower low, or but it has been rejected for a couple times. If you have, why is it rejecting so many times? Because there's all-time high to COVID low. COVID low is, this is, yeah, about the um, golden zone rejection. It's perfect rejection. So in order to go lower, it needs to go back and test this 50%, also test this 62%. So to go get a lower low. So anything could happen, so we keep open mind. uh, let's draw our levels. I draw, start with hourly. So here you can see our trading background. So I made this, so from 9:30 to 4 o'clock at the New York time. So these are the trading hours. Then aftermarket and pre-market are shaded, and so I tried to avoid aftermarket. So I like to draw supply zone and demand zone. So obviously you can see it's been tapping here 1 2 3 4 times. So you can draw a zone here, starts from here. uh yeah, so it's, let's say here. So if it breaks below this zone, uh it's dangerous. You could go lower. So put it red, blue. This is green. And for the upper, it's been typing this 1 2 3 4, more than 4 times, 5 6. So I'll say in the swing resistance, it's this zone. Yeah. So it's it always will be not perfectly equal high or equal lows, because sometimes let's say people want to uh, put their stop loss order here, and always push a little bit higher to grab those liquidity. Or sometimes some people put the sell order here, and then because there's a like say if you put sell order here, uh, sometimes it goes a lower low. Let me find yeah, this is an example. Like some people put a sell order on the top, but it never goes there. So it happened to me a couple times, that I put a perfect high of the day for the for my sell order, but it never get filled. So uh, you'd be missed out. Yeah, so that's the like thing that they played around. So my experience to go to uh smaller time frame to find the price action. Sometimes they just the price action is so good and just never go, or they just fake out and grab liquidity and go. uh, so anyway, this resistance that's marked red, and anything happens in between, it's possible. Then the levels, I definitely, this is a level first. My levels, I use purple. uh then there's level here, so you can see those levels. I try to draw levels that could happen within a day and around our price targets, because if you trade NQ or ES, mostly they won't be as much as 3%. So 3% is your daily extreme. So I draw at least to cover 5% uh, for the levels. Like this level doesn't look very good, but you can, we'll accept it. Here, there's a level here. Uh, yeah. So if we break this green support level, we can go lower, but I could be a fake out, then go up again. So we'll see. So same thing with here. So um mark this level too. So I'll say this level. Let's see. Yeah, 1 2 3. Well, the rule of thumb for level is the price needs to touch 3 times for your levels. Mhm. So those are like hourly levels. Then let's go to the 30-minute. Draw more. Um, see, there's a level here. This is for day trade. The other level is for swings. This is for day trade, and there you define more concrete levels, more fine, more detailed fine levels. Um, then here looks fine. Then it's possibly a level here. Yeah. Yeah, then there's a level here. Okay, so let's go for the next day. Um, well, by the way, need to tell you, I find there's a other block here. See, this green candle is um it makes thing it's covering the whole body and week of the previous day. So and it's bullish. That means likely we could go up, and this is the very valid support. Um, that's a very good sign. So going back to market open, see, it goes up, then it immediately goes down, but not very down. Then there's energetic candle, it shoots up. There's no wick, so this is a good sign. The whole day will be just up and up. Then it reached this high resistance. Then it rejects. You come down or pull back a little. So let's fast forward to pre-market open. Market open. Okay, that will be 9:30. So okay, 10 minutes. Okay, market opens now. So once market opens, from my experience, you check with 5 minute first, and avoid the market open. So this could be a good, yeah. There's very value gap here. Oh, there's a pullback. So if you're a trend trader, you could enter here, but for ICT, this is not a good position for long because between those two levels, you are not at the 50% discount. You're above 50%, so this is probably 62%. Yeah, see 50%. Well, you technically could, but it hasn't reached here. So I'm guessing it will touch this level. Okay, so here we need to see more details. Once you are close to this level, see this uh, higher high and higher low, and higher high should have a higher low, but then another higher high. But this height is the distance between those two highs are not as much as those two, so that means there's divergence, one divergent, two divergence, and it goes equal high. So this could be a good resistance. Um, going back, well, yeah. So I ran out of chart. Yeah, I think you catch. Let's see the 10 minute. Yeah, you should touch this previous high, two highs, or at least three highs. So you should touch this. So we'll just wait. Okay, so this is a bullish candle. Touch. Okay, so you can count it as touch. So now let's see. So there's a few fair value gaps here, but they are bullish fair value gaps, and so they're useless. Also, this bearish fair value gap, the pink one, it's being covered, so they are invalid also. Uh, so here in market structure, you see high here. So there's a fair value gap here. There's a 4 minute straight of down candles, 5 minute, another small fair value gap here. So then there's a lower low. Well, now I did ideally, so this could count a higher low. So you still wait. Hmm. See, now the market shifted. It has a lower high on 1 minute, and you can kind of see I see as a head and shoulder. Let's see how if it creates a fair value gap. So a few small fair value gaps created, and it has a higher low. That's a very good example. So it needs to go back and grab more. Um, well, there's also a there's also price order block here. Uh, let's see the range. It goes from here to here. From high to low, it's about 27 points, 0.24%. So considering the whole range is about 2%, so that's like 10% of this range. um so I think it's good enough. Okay, so it rejects this fair value gap, but this is so small. Okay, so now it's critical because there's a fair value gap here. If it gets rejected, it could go higher. Okay, it does push down to this. There is also another bearish order block here, so that creates a fair value gap here. um okay, so it rejects this small fair value gap and rejects this order block. So and the displacement here is 0.3% versus 2% for the range. Now this is I think this is good enough. Yeah, and there's a head and shoulder here, lower low, lower high. um, So it tries to go back up, but it gets rejected. Now it's an entry. I think it's an entry. Oh. Wow. Short position here. So this is my risk. Yeah. Reward. Go all the way to this line. Yeah. Okay. So check here. It creates a bullish order block, but it's still respecting uh, this line. So it's rejecting this order block. Rejects hard. So we should yeah. Now's a good time. Hold on. Need to jump to here. Yeah, make our sell order. Okay. So then we can see our drawdown. Drawdown $30. Yeah. Okay. So you can see it's higher high, lower high, lower high, and lower high. It goes high, but it's perfectly rejecting this order block. Let's see 5 minute. If there's a more apparent. Now, 5 minute it creates this beautiful fair value gap, but we already are in the trade. Let's go back. Yeah, so this is good rejection for the 5 minutes. See fair value gap. Well, you could enter here. Then your risk reward won't be high enough. So see on 5 minutes, there's a bullish order block here. No, bearish on another bearish order block here. So the preferred entry should be at, well, should be at here. Otherwise, this won't be a good example. Okay, let's fast forward on 5 minutes. Yeah. There's a macro level here. I won't count because it's not that important. Yeah, then you reach your target. So you buy, close your order, you make $337 on this trade. Your risk drawdown was at $30. Your risk is maybe $50. So R&R is seven times. It's 7. So what I'll see here is it rejects here, and possibly there's another opportunity here. But the date has been, yeah, it's been end of the day, so the trade has finished for the day.